Press record. Hi, Neil.
Sorry I'm late.
No, it's all right. So this is the sixth in our series of webinar programs. So I'll go through those that we've done so far. But any other topics that you'd like more information on, just let us know. Send us it in chat or whatever. And I've been through. I think everybody knows now. I spoke to Carly about the keeping your microphone on mute. And then if you've got a question, just raise your hand or send it in question and answer or chat, and then I'll ask the question on your behalf if you want. And as I said, we've been going through the three phases: survival, revive, and thrive. And the first workshop we had was return to work safely. Then we did communication, planning and strategy. On Tuesday, we looked at opportunity to reset the business. And we're now doing cash is king. It should have been one of the first ones, but for a variety of reasons we had to push it back to later on in the series. So we're doing it now anyway. And then going forward, next week we've got leadership, smart objectives, management information, CAT with post-COVID HR. Then we've got a sales session and evaluate and improve unconsciously, and a wrap up on where we are. The final session 2 weeks today. So agenda. Just look at what we're going to do today. Claire's going to take us through the cash is king, and we're going to look at various tools that Claire's going to take us through for cash flow forecasting, how to chase up your debtors, and how to delay payments going out. So without further ado, I'll hand you over to Claire. Claire's got a lot of experience working with clients on their management information systems and Sage in particular, and runs a payment bureau. I'll let Claire just introduce herself a bit more and then take us off on the presentation. Cash is king. I'll hand over to Claire.
Good afternoon, everyone. Good to meet you all. My name's Claire, and as Mike explained to you, I've got experience of running Sage training, Sage consultancy, process improvement, also a payroll bureau, so we know about Sage payroll as well, and providing management accounts for clients. So Mike's asked me to do this webinar, and basically it's, as Mike explained, in 3 parts. So the first part, we're going to talk about the importance of cash flow forecasting and the impact on the business that cash flow can have, and I've got some illustrations there. The second part is some practical advice on managing the cash flow. And then the third thing is some practical pointers on chasing debt. So if you've got any queries or any questions as I go along, then please just butt in and ask me or Mike. So the reason that we called this cash is king, because we've probably heard this phrase before. The most important thing, you can run a business and be quite profitable, but if you don't have any cash in the bank, then you can actually go out of business, and I'll show some of the illustrations of that and the impact on it. So we call it cash is king because it's one of the most important things that you have to keep an eye on in business, and certainly when you start up. So I'll explain to you. So what is the difference between cash flow and profit and loss? profit is your income from your sales, and then taking away your expenses. So we all know about the profit and loss. That's the thing that we obsess with, isn't it? Have we made a profit this month? That is different to the cash in and the cash out of the business. And the reason that we need to know the difference is because you can look at your profit and loss and say, yeah, we made a profit this month. But it won't necessarily tell you if you've got any money in the bank to pay your bills, or when you're likely to get any money in to pay those bills. So it's quite important to know the difference. I quite often have customers say to me, oh, we've made X amount profit this month, but they've got no cash. And one of the reasons is because you have to look at the two together, but also you need to keep one eye on the money in the bank. And it doesn't matter, it doesn't have to be a cash flow forecast. Quite often, I think when you run a business for a while, you have a sixth sense about what cash is coming in, how much money you've got coming in. And as your business grows, you know that you've got enough cash to pay your bills for that month. However, that doesn't mean to say that you can't keep an eye on your cash flow. It just means you don't have to monitor it on maybe a daily or a weekly basis. One of the things, obviously, with COVID-19 is that a lot of businesses that would normally be paying you are closed, the staff are furloughed, and so you're finding that you're not getting cash in, so it's having an impact on your cash flow. So what I've done is I've just given an example of a fictional company, and we're assuming that they've started in May, and they've done really well in their first month. So they've invoiced 75,000 and the cost is 61,500, which has given them a profit of 10,900. So, but when they've looked at their cash flow, they don't have 10,900 in the bank, and there's several reasons for that. Customers don't pay you in the same month that you invoice them. Sounds really, really obvious that, but you look at your cash flow and you think, wow, I've invoiced 75,000, but there's not that in the bank. Well, obviously, because they're not paying you until June, July, August, maybe even September if you're really unlucky.
Just on that, Claire, I know Carly's got some she wants to come in on there. Do you want to unmute yourself, Carly, and make a point there? Just a minute. All right. Yeah.
Sorry, I just can't see Claire. I
Can't see the screen?
No, I can't see you. I can see loads of other users, but not you.
Oh, you want? I think that's because I've got my camera off.
Oh, it's all right. It was just in case you showed us some examples. It's just I can't see them. That's all.
No, it's just because I brushed my hair today.
That's fine.
No, I have brushed my hair, but
Yeah. You can see this. You can see the screen though, Carly. So you've got the PowerPoint presentation up there though.
No, I can't. I've got loads of people, and then I've got one that just says user at the bottom.
Right.
I don't expect my screen anymore to get any more people on, so I'm not sure.
Right, because there should be like a presentation coming up now on the left-hand side of your screen. If you go up to the top of your screen, there should be different views, and there's one that says Speaker View. If you click on that, so top about top right-hand corner, there's some little dots. On the black bit, some little dots on the black bit, just underneath the rim at the top.
Nope, just a minute.
It should be gallery view or speaker view, and what you want is speaker view. Yeah, so if you put that on speaker view, you can then see.
I can't even see that. I can't even. I've gone.
can you see where it's got in green? You are right at the top, is there like a little bit of a bar that says something, and then if you click on it, it drops down to a bigger menu right at the top of your screen?
Right, just bear with me. I've now just got the one that says user on.
Yeah. So has that got the screen that says cash flow forecasting on it?
No, I can only see you. I'm sorry, it's gone back now. All I can see is you now, Mike. I can't see anybody else now. What have I done? Stop screen. I've got a little blue bar. I've got a little blue circle that says swap shared screen with video. Or I've got it right at the top. I've got view options.
Yeah.
All I can see, zoom ratio, fit to window, side by side. No, I don't know what I'm doing.
At the side of, yeah, that side by side, if you click on that,
That's what I've got. But now, right, hold on a minute. I've now got you at the top. Right, you as well. I can see everybody, but I'm presuming Claire might be the one that says user, which is just a blank screen. All right, little dots at the top of that.
yeah,
So, chat or hide non-video participant.
no, but the,
Can't see any more little dots at the top. My screen's fully full.
Does it say more, dot, 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 and then a more underneath?
I haven't got the dot, dot, dot. That's the thing I've got.
In your top corner.
That's where I'm looking at. I've got the black screen up to the top, and I've got two things. I've got a little blue one that says swap shared screen with video. And then I've got a little sort of square box that says enter full screen. Or then at the top, I've just got my sort of minimize, restore, and X. I've not
right,
got
just to the left of enter full screen,
Right.
there should be a thing that says views. And if you click on that,
I've got the top, I've got you are viewing user's screen, and then I've got view options. But when I click in view options, it's just, there's nothing for me to really choose.
Would it help, Mike, if I move this to my main screen and then put my
I'll tell you what,
Sorry, right, I think I've got it. So right, is it this cash flow forecasting?
that's it, yeah.
I'm on, I'm fine. Right,
Right.
sorry, I'll move myself now.
All right, just go, put your hand down now then.
do you want me to go back over the other slides? Oh, I can't hear you now. Right, okay. I think that was a no. A no. Yeah. Right, okay. So in this example, I've just used a fictitious company just to illustrate what could happen. So as I said before, the reason they don't have the money in the bank that is showing on their profit and loss at the end of the month is because customers don't pay you in the same month that you invoice them. Sometimes you have to pay your suppliers up front, and obviously that depends on the industry and how new your business is. Wages and other overheads have got to be paid in the same month that you're actually invoicing your customers. So not only have you not got any money coming in, but you're having to pay out as well. So just to show you an example of this, this is a very simplified profit and loss. But you can see here that we've put the sales in at 75,000, and we put wages and wage costs and materials in, which give us a profit of 10,900. So this is similar to what your profit and loss would look like, maybe a bit more detail. But you can see the impact that it has on the cash flow. So assuming that the company's got 10 grand in the bank to start with, it's having to pay out 30,500 with shock horror, no money coming in. So immediately they've spent the 10,000 that they started with, and they need another 20,500 just to keep going to get to base camp on month 2, which is June. Assuming that not all of the customers pay in June, some pay in July, and then some naughty ones don't even pay until August, then it actually takes until August to get all the money in that you expected to get in, which is the 10,900 plus your 10,000 back that you had at the beginning of the period. So you can see there that even just on a simple 1 month of trading, the impact that this can have on cash flow, and it actually has no bearing on your profit. So you bet your profit's been great, but your cash flow has been abysmal. So if we take this one stage further, so obviously you can see here the horror of this. So after another month of trading, it gets even worse, because even though we're making 12,900 profit in this month, you can see that the invoices for June don't get paid until July, that we've now got 2 months worth of wages to pay, and on top of that, we've even got materials that we've got to pay for. So we've got June's materials plus the rest of the May's materials, which we didn't pay in May because we got 30 days credit on those. And even if we hung it out till June to pay May's purchases, we've now got all the overheads to pay for, and worse still, we've got PAYE and national insurance from May's wages, and we've got the VAT to pay, which is now due in September. So you can see that we've got a lot more red on our cash flow. So the reality is that by the time we get to the end of September, we're actually 20,600 overdrawn. So even though our profits are good, it's going to take us quite a few months to actually claw back from a cash flow point of view. And that's just 2 months of trading. So if we then look at this then brings me on to how can we hang on to our cash, there's a number of ways that you can do it. Now, I call this hanging on to your cash in a crisis, because obviously all of these sections of webinars, these number of webinars, are really based around the situation we're in with coronavirus. But it doesn't have to be in a crisis. You can actually use some of these tools as just good practice, really. This is something that I would recommend that you would do as normal good practice. If you can pay promptly, make sure that you do. This ensures continuity of supply, because we're always keeping one eye on keeping the business going and keeping it profitable. And if you can't get a supply of goods, then you can't make goods or you can't deliver your services. So that doesn't matter whether that's you're a service company and you don't pay your broadband bill, or your IT supplier, or your web developer. It doesn't matter whether you're making widgets and you need raw materials to supply to make your widgets. So pay promptly if you can, or if you're short of cash, ask for extended terms. Most suppliers will give you extended terms if you've always paid promptly, you're a good customer, and you explain your situation to them. If you need them to work with you, then ask them, and don't be afraid to ask them. Normal practice, only pay to terms, not early, unless you've obviously got loads in the bank. unless there is a financial incentive. So ask for a discount for early payment, because that not only improves your profit, but in the long term improves your cash flow. Not in the short term, but in the long term it does, because the more money that profit you make eventually, the more cash you have in the bank. The other thing is that if you pay people early all the time, then it actually becomes the norm. And the one time when you want to conserve some cash, then actually you're deemed as paying late. So in people's minds, they think, oh, they've not paid me this month. They're not paying. They normally pay me as soon as they get the bill. What's the problem? And actually acts as a negative. So don't pay early unless there's a financial incentive, as a rule of thumb. Make sure that you negotiate regularly with your suppliers. Don't be afraid to ask for better prices or better terms. 60 days payment on when you get paid. If it's something where it's critical that you need the supply, and then there's a lag, you have to make the goods, and we'll talk about that in a sec. So make sure that you regularly review your prices. You know, in the same way as at home, you go on to the price comparison sites for your broadband or electricity supply, or make sure you do the same for your suppliers. Look at how much you spent with them, compare that to last year, and say to them, look, we've spent more with you this year than this year by X percentage, so can you do anything on the price? They can always say no, but if you don't ask, you definitely won't get. And if you are experiencing cash flow problems, my advice is that you talk to your suppliers as quickly as you can. Try not to avoid not answering the phone calls or the emails. Talk to them up front, explain the problem. It's better if you go to them and you've already got a payment plan in place. So you can go to them and say, I can't pay this invoice this month because we're having cash flow problems. However, what I'd like to do is spread it over the next 3 months, 6 months, or I can pay you 20% now, and then we'll talk about it in next month. We'll have the same conversation next month. You don't have to commit to a plan every month, but what you can do is, if you can afford to pay them something and you are agreeing to then talk to them and keep the communication open, then they will be more conducive to helping you out. And actually that goes for HMRC as well. I mean, at the moment, that has been deferred until next year. And so has self-assessment payments up front. Obviously, we've gone past the deadline for 31st of January, but for the July one, that could be deferred to next year. So that helps. So you don't actually have to talk to them about that now. However, if you can't pay things like your NIC and PAYE, and by the way, if you can't pay your pension payments for your employees, then talk to your pension provider as well and get a dispensation, because they have to go to the pension regulators and get approval for this. So make sure that you talk to them as well, and do it in the proper channels, because then it will stop you getting fines. And also, from your point of view, once you know that you don't have to pay it, then you can put it into your cash flow for later on and see the impact later on. One of the things that you could do is ask your suppliers if they would consider providing you with either consignment stock or call-off deliveries. So consignment stock, and this is obviously for product-based businesses where they have to buy materials in. If you get consignment stock, that gets put into your premises and you store it. But the invoice isn't raised on you until you actually use the goods. So they might put a month's worth of supply in and then come and take an inventory once a month of the stock, which is their stock, but in your premises, you're storing it, and they'll only invoice you for what you've used. The great thing about this is you're not having to stock hold, which ties up cash, and you've already got the stock there, so that if you have an order, you can supply it without having to go to the supplier and them saying, well, you better pay your bill first before we deliver it, and there's a lag between payment and receiving the goods. The other thing is that they might be prepared to have a call off, so you'll give them an order for a larger amount of stock, which will get you a better price, but rather than you having to take the stock, which means that you're having to tie up your cash in paying for that stock, that you can call it off in smaller quantities, but with the advantage of having the price.
Can I just come in there, Claire? Because
Yeah, of course.
I've just got a couple of examples on that it's not, like I say at the beginning, it's not just in a crisis that you want to be doing these things, because we're already doing this with another one of our clients because of Brexit. And because he's planning ahead that at the moment he's bringing stuff in from Germany. If he orders it by 2 o'clock in the afternoon, it's delivered to him by 10 o'clock next morning. And after Brexit, he's considering the fact that that might not be the case. So looking at the effects that he needs to make sure that he can satisfy his customers in this country. So he needs to have that availability of stock, and looked at all the parts that he would need if he couldn't get them kind of overnight from Germany. And it was going to be a phenomenal amount of stock and cash flow. What we were able to do was talk to his supplier in Germany and set up exactly that, a consignment stock that is still the property of the German supplier, but it's on his premises, and he doesn't pay for it until he takes it out of his stock. And I know that, I don't know whether that's of any use to such as Carly or Amanda in terms of your operations. With I know you've got stock of fair amount of sheet steel, specialised laser, and whether blinds with Amanda, whether you got your raw materials that you could potentially discuss same kind of thing with your suppliers. Is that?
Yeah, we actually retail, so our suppliers make them up, and then we buy them off them. So
Right.
Yeah.
So you're not carrying stock as such then, Amanda, but I know Carly, you've got a good level of stocks there that I know tie up a fair bit of cash. Do you use any consignment at all?
We don't. It's not something that we've. We sometimes order in stock that we think we're going to use in the month.
Yeah.
But we have to obviously be invoiced for that there and then.
Yeah.
So it is something we could look at as to whether they might be willing to do that.
I think if you looked at something like the 80-20 rule on your stock of raw materials, and you'd probably find that 20% of your products, your raw materials, you are probably used on 80% of your products. So if you took that top 20 and said, right, okay, so what we'll do is we'll talk to the suppliers about these, and either they could have them on call off. Suppliers like a call off order because what they can do, they know that they've got the guaranteed business because you're placing maybe, 6 months worth of stock requirement. So they can get economy of scale on the manufacturer of it, because what they can do is they can set their machine up and make a really long order, which means that they get more efficiency on their machinery. And then all they've got to do is palletize it and store it for you. And they might say, well, you've got to take, a lorry load at a time, or 4 pallets, or whatever it is. But from their point of view, they get some economy in their production. Or they could make it all and deliver it to you, and then you got it just as you need it. If you've got the storage space, then you could do that.
Yeah.
And it's probably worth doing it on your top products that raw materials that you use, you know, because then you're actually releasing the cash flow on all of those products. If you worked out what the value of those was and what the benefit of that would be in your business, as in cash in the bank, it might be a considerable amount of money.
Yeah, that's what I was just thinking about that for you, Carly, whether that might be something you might want to look at. Anyway, I didn't want to interrupt, but just thought it might be useful.
Yeah, definitely.
Yeah. Right, sorry about that, Claire. I'll hand back to you.
No, that's fine. That's fine. Okay, so what I've done in this cash flow is looked at a couple of scenarios. So the first one is the impact of extending the payment terms. So because this is a snapshot and it's based on 30 days, if you were very short of cash, you would do this more often. So you might even do a daily cash flow. I have a client who had severe cash flow problems, and they were literally doing this on a daily basis, looking at cash coming in, what they had to pay out, and monitoring it on a daily basis, just so that they didn't go over their overdraft limit, and deciding who to pay and not pay on a daily basis. Until it eased, and then they could extend it out weekly and then obviously monthly. But this is just based on a monthly basis. So I'm assuming that we're extending the payment terms from 30 days to 60 days. So you can already see that the impact is that actually on 2 months of trading, it's gone from 26,000 overdrawn to just 10,700. Still overdrawn, but if you're paying on overdraft fees and interest on your overdraft, or even if you've got an overdraft limit, then this is a lot more controllable because you're using suppliers' money. Now, they might not like it too much that you're doing that. However, if you've got their agreement and you've got a good relationship with them, then they might say, yeah, that's absolutely fine. You can pay us in 60 days. And then obviously that has a big effect on your overdraft. So if we look at it from another scenario, which is cutting costs in your business. So we already talked about using your suppliers' money and talking to your suppliers about cutting how much they're charging, reducing their cost to you, and reducing cash flow impact by managing your stock. But another way that you can hang on to your cash is by looking at cutting your costs. So obviously we're talking about specifically in the coronavirus pandemic that you could look to use a furlough scheme. Staffing costs are one of the biggest costs that companies have in a business as a cost of sale, excluding obviously purchase of raw materials if you're a laser cutter or provide blinds. But one of the things that you can do to look at your staffing costs is if you can't use the furlough scheme is you can look at reducing people's hours. So this may well be about getting people to looking at the roles that they do and seeing if there's some wasted time in there. Can you improve efficiency by cutting out non-productive hours and then reducing their hours down? It's not easy to do that, but one of the things that we help our clients with is by getting quite a simple form and asking the employee to write down what their job role is. So what tasks do they do? And then looking at those and then looking at the ones that are non-essential, and then seeing if how many hours that actually equates to. Looking at if your employees will be willing to take a pay cut to protect their job. Obviously, you need to have some sort of talk to HR about this. If you've got an HR department, and get some advice on it. ACAS are pretty good at giving you advice on that as well, and they're free. Because there's obviously some period of consultation that you have to go through depending on how many employees you've got. But they may well be willing to take a pay cut, especially if it's short term and they understand that long term they're going to see the benefit because they've got a job at the end of it. Looking at laying staff off, and also the worst case scenario is looking at redundancies. So that's worst case scenario if you can't continue and cash is getting absolutely critical. I think the thing about cash flow is the quicker you act, the better it is. So don't delay in making some of these harsh decisions. We all think, oh, it's going to be better next month. Next month we'll get that big order. Next month so-and-so will pay us. But if you leave it too long, then you run out of cash before you can actually have an impact on your business and start turning it around. Obviously, look at all of your non-essential services. So, you know, if you don't need your skip outside, you've been emptier every month, you can cut it down to once every 2 months and do that. If you don't need some of your services like your cleaner, if you can run a vacuum cleaner around, then, you know, look at that. Put out the tea and coffee and the nice niceties in the office. I know that these might be small things, but I'll show you the impact of cutting costs on the next slide, so you'll see the impact of some of these. Don't be afraid to renegotiate contracts. Go to your landlord and say that you're experiencing cash flow problems. They may give you a rent holiday, they may reduce it down, they may even cancel it for a couple of months. None of us like having these conversations, but if you don't have them, then you certainly won't get it. And a lot of suppliers of these will take a view that actually it's better to take a short-term hit from you and have your business long-term than you go bankrupt on them and then they don't get any money at all. So be brave when it comes to talking to these people and do it quickly. So what I've done here is just had a look at the impact of a 5% reduction in overheads. So I know we talked about some quite small things like, you know, your tea, your coffee, cutting out your cost of your bin. But if you start looking at reducing your costs just by 5% over this period, you can see that actually we've reduced the overdraft requirement from 26.5 down to 16.5. Well, that's quite a lot of money that you've not got to try and worry about paying back at some point. And if it's a short-term problem, then cutting your overheads down by 5% will give you obviously a cash benefit in your bank, and again reduce your costs of borrowing the money as well. And unauthorised overdrafts tend to be quite expensive, so if you were still you're going over your limit, then, and again talking to the bank manager is always a difficult conversation if you're already over your overdraft limit and you're not forecasting and you don't know what cash you've got coming in. So you're having a cash flow forecast and saying, this is what we've done. We've extended our terms with suppliers. We've extended, we've cut our costs, and this is our cash flow forecast. then that's always going to make you better in their eyes, because their perception is that you've actually got a control of this, you've got a lid on it. So this last slide here is about, sorry, go on.
I want to say, before you go on to the last slide, Claire, we just examples of that where we've done it. We obviously work on various grant schemes, and these come in different guises, and you've got to wait different amounts of time for the grants. And when I first started up in business and we started doing the grant funded work, it was opening a whole new area of business to us. But it meant that we were going to have to wait for money to come. Rather than getting it directly from the clients, we were going to be getting grants. And so what I did, I went in with a similar form to this and showed the kind of profit and loss to the bank. And I also then went through the cash flow. And I just laid it out and said, you know, we're potentially getting into some very profitable work, but we are going to have to wait for the cash coming in, and this is the effect. And so this is why I want, you know, for the sake of whatever it was, I can't remember, but you know, a £10,000 overdraft. And the guy just looked back over the table at me and said, I think that's the easiest decision I've ever had to make. And he just kind of, you know, signed it, and away we went, because you know, we went in with, you know, this is the work we're going to get, this is when we're going to get paid for it, this is what we've done to mitigate some of the delays, but we still need, you know, X to top us up. And yeah, I mean, I bet I was only in the office about 10 minutes and, you know, came out with a £10,000 overdraft, you know, signed up. But it was, I'm not saying that might be not be the case today, but it certainly does help when you go in with, you know, armed with your facts and figures, and they know that you've been looking at it, and they know you know what you're talking about. When we started, you know, earlier on in the series of webinars, and we mentioned cash flow forecasts, I think it was Andy at CPS, who's not here today, but he said, oh yeah, you know, we do one, you know, I know he said every day or every week, but they're doing cash flow forecasts. And he said at the time, for those of you who were on and remember, you know, it's the best thing we do in the business. Is anybody else? I know, Carly, you do some cash flow forecasting, specialised. So I mean, do you use a similar method to what Claire's got there, or?
No, ours is a daily one. So it's got all the direct debits that come out on a daily basis. We run it based on an average invoicing amount per day, but obviously we factor. So in daily, and then we sort of try to plan in our supplier payments through the month. But like now, we've been doing okay, and then the last 2 weeks we found it's really died off. So,
and have you found that people have stopped paying? Have you found that people have stopped paying you as well?
Yeah, there's some of that, but I think mainly for us, because the sales have all of a sudden dropped. We've gone from sort of putting on, our normal is sort of 16 a day, and we dropped it down to 14, which we were hitting. And then all of a sudden, the last 2 weeks, we've been sort of doing 6 and 8. So it's been quite a big drop over this last couple of weeks. So now we're having to sort of just hold on. We've sort of scrapped the plan of who we're paying when at the minute, and we're holding on to it. And then I think we're going to obviously pay the screamers.
Yeah, because I think one of the problems that you're going to have as well is that the impact of your sales dropping off now won't be felt for another 30 or maybe even 60 days, depending on, you know, the credit terms that you give your customers. So you're going to end up with a hole there because there's no money coming in. But then you've obviously you had to pay out for your suppliers for the goods that you've bought maybe a month ago. So you've almost got a double squeeze really on your cash flow.
I mean, we get, obviously, as soon as we invoice, we pull down 90% of the invoice. And so customers paying, we only actually get 10% of that.
Yes.
It's not too bad on the customer side. It's more we haven't got the work to invoice. Then, besides, it's quite a quick turnaround. So we work on like a 5-day turnaround.
Order book, yeah.
So it's a constant rolling thing. But I think all we can do is just hope that I think a lot of laser cutters have now come back to work who had previously shut. We're finding we're going up against a lot of silly prices at the moment with other suppliers going in fighting for the work. So I don't know. We'll just have to hoping it picks up a bit. We're going to furlough some more people while it's like this.
Does anybody else you look at their? Thanks for that, Callie. But I mean, does anybody else look at their cash flow? How does it affect something like in the marketing side, Neil?
I tend to look at things monthly, but ours varies quite a lot. I mean, we've got like retainer bases, so we know what's coming through majority of the time. But then sometimes, like I say, we tend, again, we invoice this 30 days usually. So then we very rarely get it where people overrun that, which we're lucky with.
That's good.
Yeah, we're very lucky in some ways. I mean, we have had it, don't get wrong, but so it, like, we don't hold stock or anything, so it's
But
it's like all,
so it's your costs are mainly kind of overheads.
it's like the office,
yeah,
and
wages
like,
and things
yeah,
like
the
that.
office and like wages, and like if we need to buy a new printer ink or a new machine now and again, stuff like that, or there's not really many overheads as such for us.
But even things like your wages and that, you've got to pay them in this month, and you won't potentially get paid until next month, or depending on when you get your invoice, it maybe even the month after. It might run into the month after. So that can be an issue even for a service company as well.
Yeah.
So it's just that you don't have the stock issue that holding stock and having to buy that and lead times and things. So. Yeah.
Amanda, do you do any cash flow forecasting at Amanda's Blinds?
We do. We as we get our suppliers make our blinds up made to measure to a customer's requirement. So as we receive them, we get an invoice and then we get a statement. So I track what we would be paying out when we get all the statements in next month. Plus we have 50% deposit, so that helps our cash flow as well.
Yeah.
So we're pretty good on it, pretty month by month tracking.
I think cash businesses, I mean, I touch on this later on in the presentation, but cash businesses have an ability to manage their cash better than account businesses, because or even if you've got factored invoices, because you're getting the lump sum up front. So actually in some ways that's a big disguise, or can disguise lack of profit. I've got a couple of clients who are in the pub industry, and so their business is very seasonal. It's non-existent at the moment, but it's very seasonal. So they do a massive amount of work, amount of sales in November, December, but January they're dead. But they've got all of their bills coming in January, which is the December supply, but no cash coming in. So they have to be really careful about hoarding their December cash to be able to pay through January, February, March, until it starts picking up around about Mother's Day. They start getting a bit busier again. So I think that having a cash business, or business where you have some money, some cash coming into your business up front, can disguise or hide a profitability or lack of profitability if you're not careful. So but it's good that everybody's doing some sort of cash flow forecast. I mean, a lot of my clients, that I'll be honest, they don't do this because they've got a bit of a back of a fag packet. They look at the bank every day, you know what's coming out. And actually that's okay as well. But the reason that this is cash in a crisis is because when you do have a crisis of the cash, you do have to be a lot more accurate with it. You can't just say, well, I think I'm going to get about 30 grand coming in today, because you might not. You need to know exactly what you've got coming in so you can manage what's going out.
Phil, I'm glad you've come back on visual on that, because I'm going to ask you anyway, because I know you do this very well. What are the sorts of things that you do, how you incorporate in your cash flow?
Okay, so first of all, we have a spreadsheet, multi-pages in there, where we have our sales, what we're expecting to sell and when. We then have an expenditure page, and then we have a cash in page when we think the cash is going to come in. Yeah. And then from that, we extrapolate what our cash flow is going to look like. So the thing that keeps me awake at night is I look at that sheet pretty much every week, 2 or 3 times a week sometimes. And I know that if we stay on track with our income and expenditure as we know, I know when we hit the iceberg. So right now, if we don't win any new business in the next 6 months, I know that we crash in April next year. However, today we've had £10,000 worth of incremental work come in on our base projects. So I think that we're actually going to be okay through this and hopefully survive it. And even at the end of the year, perhaps even make some profit. So it is important that you manage it, because if you don't manage it, it'll come as a surprise to you when you actually fail and the bank managers come in and then close your business down.
Yeah, like you say, hitting the iceberg's too late, isn't it? Because you've got a hole in your side by then, and you know you're sinking. You need to be looking over the hill and seeing what's coming as far ahead as you can. I mean, obviously, the further out you go with your cash flow, the less woolly it is. Because you just don't know when people are going to pay you and what costs are going to come in. But, you know, trying to anticipate that as much as you can is a really good thing.
I think it's just highlighted the John Harvey Jones quote that we've used on the last 2 webinars that we've done, that, you know, about planning being unnatural. But you know, we enjoy not planning, because then failure comes as a complete surprise. But you know, if we do that planning, then at least we can see what the problems are going to be, and we can start sort of looking at 3-4 months ahead and start doing things before they're needed. This was a thing with when we started doing the grant work. You know, I went to the bank. You know, while we'd still got, I don't know the figures, but, you know, let's have the sake of it, we've got 15 grand in the bank, and I'm saying, can I have a 10 grand overdraft? And at that stage, you know, the bank managers kind of, yeah, of course you can, you know, because you've got money in the bank. If you go with, you've already breached your zero, and you've accidentally gone into overdraft, and you can't see how you're going to come out of it for a few months, and then go and ask, they're a lot less likely to grant things. So the more you can predict, and the more you can go in and preempt the situation, the better your chance of getting something to sort it out. That's the advice that I'd put, you know, as a kind of non-accountant, but a business owner and somebody who runs a business. Yeah, the more notice you can give them, the more likely they are to grant you it.
Yeah, because I mean, I think if you're losing sleep now over something that's going to happen next April, imagine how bad it is if it gets to April and that happens. Because at least now you've got the opportunity to start putting plans in place to head off in a different direction, not hit the iceberg. You can't do that if you're already, you know, alongside it. it's too late. So anyway, on this slide, what I did is I did a bit of both. So if you cut your costs and extend your terms, it's just to give an illustration really of what can be done. And you know, you might find that you can't do all of it or both of them, or you might be able to do some of some things and some of the others. So not all of your suppliers will be happy to extend terms, and you can't cut all of your costs. And actually there is a point where you can't cut your costs anymore. So you know, there is an argument about marketing your way out of any problems that you've got. And I'm sure that Neil will agree with me on this, that you have to keep the sales coming in ultimately, because there's some point where you can't make everybody redundant and not pay anything, and indefinitely not pay your suppliers. So at some point you've got to generate some sales. So cash flow forecast is important. Cutting your costs and extending your terms helps as a short-term strategy, but please don't rely on it in the long term, only as good housekeeping practice. So some of the things that we talked about in the earlier slides about not paying suppliers too early, renegotiating your terms, they're good practice. But not paying your bills is not good practice ultimately. So this is a crisis situation. We're on a war footing. So I just wanted to touch on, we touched on this very briefly earlier on, but I just wanted to talk about cash businesses versus account businesses. So some of you have got a combination of both. So Amanda's got a cash business essentially, or a business where she certainly gets a deposit up front, and account businesses like Neil's, where you can only wait for your money once you've delivered your goods. Like Mike and like myself, I invoice at the end of the month following delivery, and then get paid sometime in the following month. So if you're a cash business, then the constant flow of cash can disguise a lack of profit. And I've had experience as a business where this has happened, where, and actually a good example of this is, do you remember Woolworths? Unprofitable for a long, long time, but because they had cash coming through the door, which meant that this week they could pay wages, this month they could pay rent. So even though they weren't making any money, they probably limped along through a couple of years of the recession, longer than they were entitled to, really. So cash businesses tend to disguise an underlying lack of profit, or can do if there's no profit in the business. So if you're a cash business or you have cash up front, then make sure you're looking at your profit and loss in relation to cash flow analysis. So make sure that those figures that are your profit are enough to sustain from a cash flow business point of view. If you've got profit, will ultimately, if you're making a profit, it will also convert into always convert into cash eventually. However, as we can see from the earlier slides, that takes some time. So there's got to be enough inflow of cash coming in to sustain you while your profit starts filtering through and converting into cash in your business. Allow for seasonal fluctuations. We all get them to a certain extent, but certainly businesses that are in hospitality will do. Maybe people that are in the blinds business, you might do, because people actually don't bother doing things to their houses in winter. So when it starts coming towards spring, they start spending more money, or maybe in the run up to Christmas, they decided to do the houses up. So you might find some fluctuations around holiday time. Sales drop, do they? Maybe because people are on holiday?
Yeah, interesting though, this January was the best January we've had for years. So we were quite surprised.
You know what that's down to?
December, I know that in retail, normally November's our best month, and it was down in November. And December was just an average December, but January was the best. So it really strange, and we expected as well. We've got the business up and running this week, so we expected people to be careful of some of the cash, but we've actually had some good orders in already this week.
Yeah.
Claire, was yours a rhetorical question when you said you know what that's down to, or?
No, I was actually interested to know if you understood why it was different in January, normal January, because obviously when we're doing our forecasting going forward, understanding peaks and troughs and seasonal fluctuations are part of it as well. Because if you're going to do a cash flow for the next 8 weeks, you see, as a rolling forecast, knowing what your sales are going to be that you've not even anticipated and certainly not invoiced yet, are part of the cash flow management as well as your profit and loss management.
I honestly don't know, but I do. The other pattern of thing I noticed last year is our summer, because we had bad weather last year, so I guess people aren't realising that they need blinds to shield them from the sun from the windows. So we had a bad summer, and we had and it was the same across all the business, across all the blinds industry, due to the weather in the summer last year. So it's some things are really weird, but yeah.
One thing, Amanda, which I mean, we do a lot of work with double glazing manufacturers, and I think they're related to windows and blinds are related to windows. And one thing which you've identified, November's normally a good month, and the reason why things like windows and blinds are good in November is because if people are going to get it done, they want to get it done before Christmas, because people are going to come round. And nobody puts new windows in December, because after you put in your windows and you've got to decorate, and then your house wouldn't have a chance to decorate before Christmas. So quite often, you see that peak in double glazing in November, because people don't want to leave it too close to Christmas. And I'm wondering this year whether, in general, there's been a lot of people holding back on orders last year because of all the uncertainty over Brexit. And I mean, they didn't know whether we were going to be exiting Europe or whether we weren't going to be exiting. They just weren't going to place an order. As it turns out, we're coming out of Europe, so all right, we know what's happening, and people are then placing orders. I think if they said we're not coming out, they'd still place the orders. But whenever it were uncertainty, I think a lot were kind of bottled up, and then as soon as we got some clarity, then I think that's what gave us a kind of peak in January, after the kind of Brexit decision being made in December. So that's what we've been seeing anyway. But yeah, the double glazing people always have that peak in November, and it's good to see now that you've opened up again. And yeah, I mean, people, it's coming to the summer. If you're going to get working at home, people, like I'm working in front of a window, I've got blinds up. They're not yours. We didn't know you when we had them put up a few years ago. But because I'm working at home, the blinds up at this window, and there's more people working at home. So therefore, they're possibly looking at blinds for that type of reason. But
yeah. I also think as well that business to consumer are going to do well over the next few months as people start getting back to work as well, because nobody's had anything to spend the money on. So individuals have built up a bit of cash in the bank. When I was talking to the lady behind the counter at Sainsbury's, and she said, I'm saving 700 quid a month. She only works part-time, but she's saving 700 quid a month because all she's doing is going to work, going home, going to work, going home. She's not going out for meals, the pub, on holiday or anything. So I think whereas the business to consumers are going to benefit from this, obviously further down the supply chain, it's been difficult because nobody's been buying anything. So for quite a few weeks now, they've suffered cash flow because they've still had to pay rent and electricity and wages, even if they're furloughed, they've still had some commitments there, and not getting any revenue in as well. So obviously winners and losers and all of this, but so I think probably the reason that you've been busy, Amanda, is because now you're opening up. People have got money to spend.
Yeah, and I think some have been decorating as well during the because there's been nothing else to do. So.
Of course, and not being able to buy any blinds, they just want to finish the rooms off now, don't they?
To be fair, we had over 70 leads to ring this week for new business.
Goodness, that's great.
Yeah,
that's really good. So your seasonal fluctuations, when you're monitoring that, are going to be quite difficult to predict, aren't they, based on this year?
Yeah. Luckily, I've got a good few years.
Yeah, you have to just discount this year.
Yeah.
So obviously the point that I really wanted to make is that if you're an account-based business, you're forced to manage cash flow better than cash-based businesses. So cash is coming in, it's keeping cash flowing through, you're able to pay your bills. Account-based businesses are having to wait to be paid before they can pay. So they're forced into managing it better. So any questions on that? No? Okay. So just a quick foray into what working capital is. So we will talk about working capital in our business. So I just really wanted to give you some formal interpretations of what it is. So it's a measure of your company's liquidity. So that's the amount of cash that you got in your business. Your efficiency. So a company that doesn't have working capital is probably working in an inefficient manner. And this can be inefficient in the way they pay suppliers. It can be inefficient in the way they're controlling costs. Efficient in the way that they're borrowing money. It's a measure of the short-term financial health of the business. So whereas the balance sheet, retained P&L, retained cash in the business is a long-term metric of your financial health. The short-term is how much cash you've got in working capital. And some of the problems that having no working capital give to a business. So you can't grow a business if you haven't got any cash in the bank. In fact, you can't even pay your bills. So if you wanted to go out and buy a new piece of kit, like Neil was talking about, no chance, even if it's a new printer. You can't invest, so you can't invest in improvements in your business, whether that's investing in a new website or investing in training people, or even in process improvement. You can't pay your suppliers, always a bad thing, because if you can't pay them, then you don't get any more goods or you get cut off. And if ultimately the worst case scenario is you can't carry on trading. So this really brings me to the final section of the presentation, which is about debt chasing. So I've talked about how you can cut costs with suppliers, how you can extend your terms, how you can cut your overheads down. But one of the things that we all really hate doing is chasing debt. One of the reasons for that is because certainly in small businesses, we have quite a personal relationship with our customers. They're friends. In some cases, we go out for a beer with them. There might even be somebody that is a neighbour. We get a lot of work through word of mouth. And so picking up the phone and asking someone to pay a bill is quite difficult. And also doing it in an effective manner is difficult as well. And I'll go on to some of the reasons for that. So I thought it was worth having a section on this. If you take one tip away from this that helps you, then it's going to be a good thing. So I thought it'd be worth putting a section together, and your feedback and some of the tips and things that you do and some of the difficulties that you have as well would be really useful. So I wanted to start with right at the beginning, identifying what your terms are. So we're all really, really keen, aren't we, to get the order. And we don't always say, right, this is the order. Thank you very much for that. Thank you. I accept your order. However, this is how I want you to pay me. We're so keen to sign up and get cracking on with the job that we actually tell our customers what we expect. We expect 50% up front, as Amanda says, and that's always hard to ask for that as well. And I think for Amanda, it might be easy because she said, look, I can't place the order on my supplier until I get 50% off of you because they asked for 50% off of me. But for Neil, they might say, well, actually, do you know what? You're building me a website or you're doing a marketing project. I'm not even going to see the benefits of this until 12 months down the line. But sorry.
We do ask 50% now, though.
Yeah.
On new, like if it's branding projects or something like that, we ask 50% up front. And
it's a hard discussion to have sometimes, isn't it? Because they don't know what they're getting for their 50%. Until they start to see a tangible result at the end of it. But you're putting a lot of upfront work in as well, I guess, at that point. Yeah. So probably 70% of the work is done in the first 2 or 3 months, I would think, of a project.
Yeah. It shows, I don't know, I think it shows a bit of commitment on their side as well to us.
Absolutely, yeah.
Because it's a bit scary for us, for somebody we don't really know that well. To be putting all that work in and not getting anything out of it if they do run away for whatever reason.
Yeah.
I mean, not just that, Neil, but I mean, we've had situations where we've done ISO systems for clients, and then you put it in, and they're not paying us because they've got cash flow issues, and as we said earlier, they're going to keep their suppliers sweet. Yeah. Because if they don't pay the steel supplier, they're not going to get the materials in to do the job. We've already done the work for them. And you're in a similar kind of situation. You've done the work. They're the ones that you can just keep putting off them because they're probably not going to want out until next year, until their audit's due or something like that. So, but the steel supplier, they've got to pay them because they'll not get the steel to make next month's invoicing out. So, you're right to do that, and we do similar where we can. You get that 50% up front, and
we didn't in the start, and I think it's just about having a bit of courage to ask for it. Really, I think.
Yeah.
I think that's what it.
Yeah.
A lot boils down to.
And having your arguments on the way in, not on the way out. An accountant gave me that quote many years ago, and by the way, it's no accident that accountants are always the last to be paid. You only pay your accountant when you need your accounts doing and your tax return putting in, so they know about cash flow issues because they suffer them on a day-by-day basis. And I remember my accountant many years ago told me that, and it's always stuck with me. I mean, we put on our terms, going back to what Neil does, we actually amortise our projects over a 12-month period because we have to provide ongoing support for the project. But one of the problems is that, like you, we have a lot of upfront work that we have to do. So probably 70% of it is done in the first 6 or 8 weeks. So we put on our T's and C's that actually if you pull out before the end of the 12 months, we will charge you a pro rata amount for the amount of work we've done. So you're not wriggling off the hook just because you've not paid 12 months up. Because if we've done 70% of the work, you've got to pay for 70% of it because we've done it. So, but we have that discussion with people because you've got to let them know up front, because the one thing that you don't want to do is say, well, I didn't know any of that. You didn't tell me this at the beginning, and then that weakens your argument when you're chasing the money in. I did some research, and 50% of invoices are paid late. Now, for SMEs, I know that they brought in the legislation that says you can charge interest and you can put that on the bottom of your invoice. But the truth is that if you're an SME, it's quite difficult to charge that because it spoils the relationship with your customer. And so starting to put an invoice in for interest every month is a surefire way to make your customer fed up. So on the basis that if you're invoicing somebody on the 3rd of May, so it's at the beginning of the month, they might not pay you until the end of June. That means that you've got to stand the cost of that for almost 2 months. So that's obviously an extreme example where you're invoicing somebody at the beginning of the month, and regardless of what your terms are, they might decide to not pay you to the end of June. So that's a late payment. Whichever way you look at it, that's a late payment. So I just wanted to go through some of the terminology because we get all of this. So just in case you don't know this, and some of you may know this, and some of them you may know some of them and not know some of them. So hopefully you'll learn something. So 30 days net or 15 days net or whatever it says, the net part means that it's from the date of the invoice. So if you invoice it on the 3rd of May, then what you're saying is, please can you pay me by the 3rd of June? Or if it's 15 days after the date of invoice. And I don't think many of us can hold our hands up and say that we actually taking notice of that anyway. We'll pay when we damn well want. And by the way, so do our customers. 30 days end of month means that regardless of when you invoice it in a month, it's 30 days from the end of that month. So if you invoiced it on the 3rd of May, then the invoice will not come due until the 30th of June. So it's, if you invoice it on the 31st of May, then it comes due at the end of June, exactly the same. So when you're using that as a payment term, you need to be cautious because you could be giving 60 days credit or almost 60 days credit inadvertently to your customers. So like I invoice at the end of the month, so it makes no difference to me. It falls due 30 days or 30 days net or 30 days end of month, it's the same date. But if you're invoicing as you go along for jobs, which I'm guessing in the steel industry, well, probably most of you do, apart from maybe Mike, then you just got to bear that in mind. Contra, that's when you've got a supplier who is also a customer. So I don't know if any of you have got these. I've got a couple of customers that have suppliers that are also customers, and it causes them no end of headaches because they want the money in from their customer, but they don't necessarily want to pay their supplier, but it's one and the same person. So when you're supplying somebody who's a customer and they're also supplying you, just be careful from a cash flow point of view that this doesn't negatively impact on you, because sure as eggs are eggs, if you're going to ask them for the money, they're going to ask you for the money, and why wouldn't they? So if you want paying early, they'll want paying early. So contra payments are a good idea to actually stop money coming in and out of your bank account, because you kind of write off, but also it means that you've got to discount any money that's coming in from that customer, or the difference between what you owe them and they owe you has got to be discounted, because it's not going to have much impact on your cash flow if it's just going to be contoed off. Stage payment. So Neil does this. You get 50. He charges 50% up front, and then the next amount either on delivery or at stages throughout the project. And actually Amanda does that to a certain extent as well, because she pays for 50%, charges 50% up front. One of the dangers with that is you go and spend the money and then do the job, and that money is gone then, because it's so easy, and that again could disguise cash flow issues, because you're getting the money in, and then guess what, you've got to, especially in Amanda's case, she's got to pay for the materials a month later, but she's already had the money in, spent it, and now she's got to find the money for the materials. So be careful when you're doing stage payments, that you're keeping an eye on your cash flow and the impact that has, because it's great to have that money in to keep your cash in your bank and keep your overdraft down if you're going into overdraft, but it'll have an impact later on. Likewise, pro formas. So if you're doing a pro forma payment, so you're asking for the money up front, again, that's great for the same reasons. You're getting the money in, great for cash flow in the short term, but don't forget that you only get that money once. So you've got to still pay for those materials. So when they come in and you make the goods or you deliver the service, and then guess what? You've got to start paying your overheads or your wages or your supplier, and that money's already come into the bank. So is everybody okay with that? Are you all familiar with those terms? Yeah, and probably deploy some of them or all of them at some point in your careers. So before you deal with a new customer, and Neil talked about how he now charges up front, or 50% up front when he talks to a new customer, when he engage with a new customer, assess the risk. So you can subscribe to credit checking services and people like Credit Safe or Experian. And there's also some free services. So on the right hand side of the screen, you can see a screenshot. This is actually for a company called Acme Limited, and believe it or not, they are a real company and they're based in London. And this is a free piece of advice, so you can actually see over a number of years how they've performed. It gives you quite a good snapshot, this size of business, or a micro business. It can give you an idea on cash balance sheet normally, because obviously they are a small business and they don't have to put profit and loss in. Profit and loss only has to go into Companies House if they're a larger company. But it gives you a bit of a snapshot and you can make a decision from that. I recommend that you regularly look at these type of information. Companies House have a free web checking service. So if you go into companieshouse.co.uk or companieshouse.gov and go to the web checking service and type in your own company or anybody you know, and check your accounts and what they look like, and get used to reading them. Get used to looking at this that's on the right hand part of the screen and understanding what they're telling you, because that gives you an idea of what risk you're going to take. Look at trends, look at are they doing better than last year? Have they got less cash in the bank than last year? Is the profit trends going down? You know, do you think they're in trouble? So it's worth getting used to this. It takes a little bit of practice, I think, start looking at these and extracting the important data. I mean, we subscribe to Credit Safe, and it makes it easy for you on there because it gives you a credit score, a bit like Experian does for personal finances. So straight away you can see, or a credit score of 42 is not as good as 82, for example. Whereas things like Endo don't necessarily give you that. So you've got to make your own judgment on that. But looking at trends can give you an idea. So the financials here, which tell you what the liabilities are, you know, are they going up, are they going down, gives you a bit of a clue to how they're running their businesses. And I always think as well that if a company comes to you without you courting them, without you having a dialogue with them already, I mean, obviously it's different if you're in business to consumer, but they suddenly come out the woodwork with a massive order, then you're thinking, well, why are they doing that? Is that why have they not gone out to 3 suppliers, for example? Why are they not asking you? And worse still, they just accept the first price you give them. That rings warning bells with me, because I think that maybe they've cut off their supply with a normal supplier, and they've got no choice but to buy from you because you don't know them. So it's just worth doing the credit check. When you're dealing with a new customer, set a credit limit, or any customer really, but certainly with new customers that haven't got a track record. Set your credit limit and stick to it. If they want you to review it, then say that you'll do that once you've got the account. So ask for their management accounts, or say that you'll wait till they come out on Company's House and you can have a look at them. When you set the credit limit, make sure that you monitor it, and if they go over the credit limit, don't be afraid to ask them for a payment to bring it under the credit limit. That reduces your exposure. And if they're okay and they understand that, then they'll pay it. If they're not and they're balking, and then you need to do some credit checking and make sure that they haven't got cash flow problems of their own. Don't be afraid to ask for cash up front. New customers, ask for cash up front. If somebody breaks their credit terms, ask for cash up front. This is your cash you're talking about and your survival. And you know, as good a relationship as you've got them, and as good of friends as they might be, and the great mate down the pub, this is about your survival. I always think of this in terms of when you go on an aeroplane, and they're going through the safety checks, the pre-flight safety check, and the air host is stood up the front. The piece of advice they always give you, or the instruction is, put your mask on first before you put anybody else's on. So in other words, you're no good to me if you can't breathe. Save yourself first, and then you can save others. And it's a bit like this with the cash flow. You can't keep your employees in jobs, you can't keep supplying your customers, and you can't keep buying from your suppliers if you haven't got cash in the bank. So you need to conserve your cash, and guess what, your suppliers will be doing the same to you as well, and your customers. So if you're not on the same page as them, then you're going to be the one that's going to be squeezed at both ends. And finally, if they are high risk, so in other words, their accounts don't stack up and they don't want to pay you cash up front, then there should be an alarm bell going off somewhere that says that smells bad. And if it smells bad, it probably is bad. So be prepared to walk away, because there will always be another customer around the corner. Don't ever be so desperate for customers that you take on high risk ones.
Just to emphasise that, Claire,
Yeah.
we did have a client who back in 2008. It's an example that I always use on this. In the last crisis, and went in to see him as a manufacturing advisory service job as a diagnostician.
Oh yeah.
And they had three customer bad debts, and so there's no money, no work, and they got a VAT bill to pay and didn't know what they were going to do. So I got the job to go in and talk to them on behalf of the manufacturing advisory service. And I went in, and Dad was the MD, Mother was the company secretary, daughter worked in the office, and son-in-law was production manager. And so we sat down and started talking to the mum and dad, and he was telling me, what had happened and everything. And they were wondering where they were going to get the money from for the VAT bill. So I said, well, have you considered factoring? He says, oh, we already factors invoices. So I said, oh, well then, that it's a bit better then. I said, because if they factor, they'll be insured, so you'll be able to get the debt back that way. He says, oh no, factoring company said they wouldn't insure customers. So without thinking, I'm sort of mouth straight in gear like I normally do. It was just kind of, well, didn't that tell you something, that if the factoring company won't insure them, then you've just taken them on? I just said that without thinking. And before I knew it, his wife, who was at the side of the table, what company says, I told you not to take them jobs on. I told you that we couldn't trust them customers, and I told you we shouldn't be doing it. And I thought, oh God, I'm doing managed guidance now rather than bloody business support. But they said that the factoring people had said they wouldn't insure the debt. But the MD said, yeah, but if we hadn't taken the work on, we wouldn't have had anything for lads to do. I said, yeah, but no, you've had something for lads to do. You've paid lads and you've paid for the material that they've done it with, and you've still not got the money that's come in. So you're even worse than you would have been if you hadn't just refused to take the orders on. So at that point you could see, but that sort of backs up that point that you've got there, Claire. If they're high risk and you can't get the money up front, then just be prepared to walk away, because you'll only finish up digging yourself deeper into it.
And it's a really, really hard decision to make, especially if you need the work. But as Mike's just illustrated, actually in the long term, it doesn't help. So going on to the next thing. So we're talking about some of the basic things that you should do. So state your accepted forms of payment in your terms of trading. How do you want to get paid? All forms of cash are acceptable, obviously, but what you don't want to do is have people saying, well, I didn't know I could pay you by back, so I sent you a check and it's in the post. Yeah, right. And it's come by snail mail, and because of the lockdown, nobody's delivering anything. So make sure that in there you can stipulate that if you're willing to take it by backs transfer, you can take credit card payments, however you want to pay it, cash in a suitcase, that's absolutely fine. Put it in there so there's no arguments. Make sure you address your invoices to the person authorised to pay them. So what I always do is copy Mike in, for example, and then copy the accounts lady in, so they both get it. There's no argument then. So the person who gave me the contract gets a copy of the invoice, and the person who is in accounts gets a copy of it. It's only a CC on your email absolutely worth it, because you make sure then that you've got the right person seeing the invoice. And that, by the way, reduces the delay down, because if it only goes to the accounts person, they have to print it off, put it on somebody's desk to sign it off, and that could be a week or 2 weeks. It's landing in somebody's inbox, and they open the invoice up and go, yeah, that's fine, and forward an invoice back to accounts, an email back to accounts saying, please pay this, it's fine, or I authorise this. That cuts down on that as well. Make your invoices clear. Make it clear what you're invoicing for, when you delivered it, whether it's a service or a product, and how the invoice was made up. So one of my biggest bugbears is not being able to find the invoice number or the purchase order number on the invoice. And the other thing is this delivery including VAT or not including VAT? So I get down to the bottom and I can't get, when I'm entering my invoice on, I can't get it to agree because they've put delivery on, but the VAT is in the VAT column. It's different because there's delivery, the VAT, there's VAT on the delivery, but it's not shown on the invoice. And so I'm there trying to work out what the VAT is. So make sure that your invoices are crystal clear. Make sure it's clear on there what you're supplying at all times. Make sure that on your invoices and statements, you put how you want it paying. So bank details, put your bank details on your invoices and on your statements. Because the person that checks the statements off might be, and does the payment run, might not be the person that's actually put the invoice on the system. So if you put it on both, then there's not a problem because it's on there. And always put your bank details on and make it nice and prominent as well. Make it easy for customers to pay you. If you're using Sage, and I don't know if you are, but I think the other software does, when you send invoices electronically, there's always a pay now link on the invoice. So as they open the PDF up, there's a button they press that takes them to a payment gateway. So make it easy for your customers to pay. If you don't have that and you take credit card, put on your invoice, we now take credit card payments. Ring us now to make it easy for them. So some other rules really for getting your money in. Regularly send your statements. Get into a routine, diary it up to send your statements. I usually do it, my invoice at the end of the month, around about the mid of the following month. Some people send them out straight away as soon as they've sent their invoices out and updated their ledgers. But send them out regularly because a lot of customers only pay on statement. That's the first thing. So if you don't send a statement, then you're not going to get paid, or you get less chance of getting paid. And secondly, if you've got an invoice that's gone astray, they've not received the email, it's gone into spam box, or it's not been received in the post, the chances are that they might get the statement. So you've got two chances of asking for the money, once on the invoice and once on the statement. And if they look at the statement and say, well, hang on a minute, I've not got this invoice, it'll prompt them to come and come back to you and ask for the invoice. So you've not gone a whole month thinking, oh, I'll get the payment on this any day soon, I'll receive payment, they're going to pay me soon for this. And then they'll go back to you and go, sorry, even though I was supposed to be paying you, I've not received the invoice. And then you've got to start the process all over again. Because especially if they've closed their month's end off, they'll be reluctant to date it in the month that it's been actually originally invoiced. So worse still, they might date it in the new month and you've got to wait yet another month for it. You send your invoices out, send them out regularly. Make sure that when you send your invoices out, it goes without saying, but it shows the latest position. So make sure that any payments they've made to you are shown on there, and any new invoices that you've just raised are shown on. So it's the latest statement. if they get an invoice and it's not showing a payment on it, all they're going to do is ring you up and say, you're not showing that latest payment that I showed. This invoice is wrong. Can you send me another one? More delay. Or if you send it out and then there's a new invoice that hasn't been added to it, you're not going to get paid for it because they don't know it exists. Or if they've got the invoice, they'll say to you, can you send out an up-to-date statement because it isn't showing your last invoice. So make sure your statements are up to date before you send them out. Ask your customers to check the statement and request missing invoices. So what I mean by this is in your email to them, say, please find statement, and if there's any discrepancy in this, please contact as soon as possible. Put a contact telephone number and an email address on the statement and in the email. No excuse for them to say, oh, I didn't know how to get hold of you. And make sure that you've asked them to check it, because then it takes away the argument. Well, did you not check your statement? I did put it in my email to you to ask you to check the statement. Resolve any disputes promptly. So if somebody comes to you and says, oh, I'm disputing this, well, you quoted me this price and you've charged us wrong, or I didn't agree to carriage on this, make sure that you send your credit note out quickly. Make sure that you resolve it and you agree that they're going to pay it and they accept that price, and put it in an email to them with another copy of the invoice saying, further to our conversation, you have now agreed to this invoice and I attach it. Then you're not going to have any excuse for them to not pay you late. Oh, we're not paying your bill because invoice XYZ, we're in dispute with it. Again, don't give the customer an excuse not to pay you. So any excuse, and all of those are an excuse not to pay you, just swipe them away. Send the statement, record it when you sent it. So you'll have a record on your emails if you send them by emails. If you use something like Sage or similar software, it automatically, when you send the statement through from the software, it also records it on their customer record. This is because you don't want them to say, oh, I didn't get your statement. Well, actually, yes, you did, because I've got the email here. I'll forward it through to you again. Obviously, I'm talking from somebody who wants to get the cash in, because we all use these excuses, or probably have used them or heard them all when we're paying suppliers. So it's all a bit of a game, but we have to use the same level playing field. One of the things that I wanted to talk about was if you've got a customer that you've been dealing with for a long time, it's quite easy to get complacent. So Neil was talking about new customers, you get the money up front, but what about customers that you've had for years, and identifying when they could actually be in danger and having cash flow problems. So what I've done is I've looked at ways that you can recognise changes in the pattern of behaviour. So a good method is to regularly review your customers' average days that they take to pay. So some software such as Sage calculates this for you. It's just a report. But if it isn't, just run a bit of a spreadsheet every now and again that says, right, this customer normally pays me on 30 days for the last 12 months I have. Odd in the moment, they're suddenly taking 60 days to pay. Why is this? Now, if you've supplied them with a large order and they're suddenly taking 60 days to pay, it may well be that you're part of the supply chain and they've had to supply somebody else, as Mike was talking about with his example earlier on, the mass customer. And are they now experiencing cash flow issues because all of their suppliers are wanting to be paid, but somewhere down the line they're not being paid by their customer? So just watch out for things like that, and talk to them about it. So say if you identify this, it's just worth having a a phone call and saying to them, oh, I noticed you paying me a bit late recently. Have you got any problems? Is there anything I can help you with? You know, what's the reason for this? They might just tell you as well. Take steps to minimise your exposure. So by talking to them, you can identify if there is a problem and start trying to get your money in from them. So the flip side is start talking to them about payment plans. If they say, well, actually, yeah, we've had a big customer go bust on us, we're short of cash. Right, okay, well, obviously you've got to pay us, so how about paying us over the next 3 months? Because it's better to get a third in and then 2/3 in and get nothing in, because all they're doing is body swerving you. So start taking steps as soon as you can. And if it's a big customer, start putting that into your cash flow forecast, that you might not get this money or you might not get it immediately. So some of the things you can do is you can reduce their credit limit so that you're not keeping supplying them, so they've got to pay you before you can supply them anymore. Start chasing your debt earlier. So I've got a customer who they had a girl that was chasing their debt in, and she was a little bit reluctant to get on the phone, so she was just emailing. And they gradually noticed that their debts were getting longer and longer, larger and larger, and people taking longer and longer to pay. So the MD got involved, and he started chasing it, and it helped that obviously he was the MD and he could be a bit tougher with them. But by chasing it more promptly, he started to pull it all the way down until they now got most people into terms. But also, interestingly, it identified the customers that were actually in trouble, and one of them's actually gone bust on them subsequently since. But they wouldn't have recognised that as early if they hadn't started chasing the debt in earlier. Introduce pro forma payments. So if you have customers who are in trouble, then start asking for the payment up front. Or you could supply on a 1/1 basis. So what I mean by that is you supply them one order, before they get the next order they pay this one. So you're constantly keeping them your exposure limited to just one order from them. Over time, it goes without saying, try to build a reserve of cash, because when the bad times come, you will need it. And we've all lived through one recession, and in our lifetime, I think I've seen probably 3. I'm that old, so, and I'm sure I'll probably see another couple more in my lifetime before I finally retire. So having cash in the bank, and this is why we talked about this, cash is king. Means that you can weather these storms. If somebody goes bust on you in the early days, it's a disaster because you don't have the cash to weather the storm. So over the time, try to spend less than you make, and keep that cash in reserve. It's always sometimes it's deemed to be inefficient to keep cash in the bank. You should always say, you know, use your money effectively, try to reinvest it in expansion. But there's nothing wrong with keeping some money in there in reserve for a rainy day. Some tips for how to chase debt. So this is practical tips. So be reasonable. If you're unreasonable with someone, I always think it's like, you know, when you have a car accident, nobody on purpose means to crash into your car. And your first instinct is to get out the car, march around the back of the car and go, what the hell were you doing there? Weren't you looking? But if you're reasonable, then, and I understand that that person didn't mean to crash into you, it was just an accident, then you're going to get a more logical and better outcome out of it. So understand that most businesses go through bad patches, and your customers are no exception. All businesses go through them. Some bad patches are worse than others, but we're all sat here, and this time at Christmas we had no idea that coronavirus is going to impact on our businesses, and we've all had it's had an impact on all of us. You know, at least 3 of us out of here, maybe even 4, are working from home. So that's had an impact. Some of us have had to furlough our staff. Some have had a downturn in trade. So we can't see what's coming over the hill always. So understand that some businesses just go through bad patches. And your customers are no exception. So try to be understanding of that. Be supportive but firm. So you want to understand that they're going through a bad patch, but at the same time, it's not your problem. So what you've got to do is, well, it is your problem because they're not paying you, but what you've got to do is insist that they put some plans in place to start paying you back, because what you don't want to do is go to the back of the queue like Mike was talking about. Just because you're not needed, you need to be at the front of the queue, and if you don't get in there, then somebody else will, which means that there'll be no money left for you. So make sure that you're part of the payment plan and you're on their cash flow forecast. You're not in the to-do list. Keep the communication going. So make sure that you keep talking to them, asking how they're doing, how their cash flow is. Are they okay still with the payment plan? Are they going to achieve the payment that they said they were? So if they said they're going to pay you this month and then in another 30 days time, make sure that in 29 days time you're ringing them. Make sure when you're chasing debt that you've got everything to hand that you need. So there's nothing worse than saying, well, I don't know what you mean about that. I don't remember. Have you got the delivery note? Can I have a copy of the delivery note? I never received that. Or I asked you for the delivery note, you never sent it. So have everything to hand and details of how and when you chased it. So you can say, well, actually, I did send that delivery note. Your email address, if you look on your email, it was dated so and so, you'll see it. Take all the arguments away. Don't get cross. It goes without saying. When somebody says to you, well, I'm not paying you, and especially if you're talking to a non-stakeholder in the business. So there's somebody who has just been trained to back you away. Don't get cross with them, because all they'll do is put the phone down. They'll put the phone down and just go make a cup of tea and come back and see if you're still ranting on. They'll be putting faces behind your back, and what they'll do is just actually not pay you. You'll go to the bottom of the list. So don't get cross with them. Again, try to be reasonable, because you'll get more out of people. It's just the same as if somebody's shouting down the phone at you. You switch off, don't you? Make sure you record every communication. I touched on this in the last slide. Make sure that any promises kept or broken, you record them. And the reason for this is, A, that you can remind your customer of this, but also if you need to take this to court, then you've got a record of that proves that you've done everything. You've done your due diligence in trying to chase this debt. You've not shoved the invoice in, left it for 6 months, got up one morning and thought, you know, I'm paid off with this, that they've not paid, I'm going to shove them in court, because that is unreasonable. So make a note of when you sent statements, phone calls, so you can prove that you've done everything in your power to chase the money in. Make sure you get the names of people that you speak to and the date. So it's no good saying, oh, well, I spoke to someone. Who did you speak to? I didn't get a name, sorry. Oh, well, or it's Claire. Claire who? We've got 3 Claires in the office. Oh, I don't know which Claire it is. it helps from a last resort point of view, and also all those customers say, oh, I don't remember you ringing me. Well, actually, it was you I spoke to, and I spoke to you on this date. So it takes away that argument, really. The other thing as well is by chasing debt regularly, you build a relationship with your opposite number and your customers. So by being reasonable but chasing them on a regular basis, you get to know them in first name terms, and they get to know that on the 15th of every month, you're going to be on the phone to them asking where the payment is, and they know that therefore to avoid having to have that conversation with you where they go, oh, I'm really sorry, I know, I'll get round to it, or I need to talk to my MD about payment, or you are on the payment run. They know that you're going to call on the 15th. They can say, yes, you're on the payment run for this week, it'll be in your bank for the Friday, because you will actually mentally always go to the top of the list above anybody who doesn't bother chasing, because they know that you're always going to chase the debt. So again, which comes to my point, be consistent about your chasing of the debt. There's no point having a big splurge when cash flow gets tight for you, because your desperations are going to come across. You know, when you're begging on the phone, please will you pay me by the end of the month because I've got my VAT bill to pay. They're going to think, well, yeah, well, I'd love to pay you, but actually we've got our VAT bill to pay, so I'm sorry, we can't pay you. And also, if they know that you're not going to ring them for another 3 months when your VAT's due, then they'll just go, yeah, we'll pay you. You get enough money in to pay your VAT bill. And they'll think, oh, thank God for that. They won't be ringing me for another 3 months. And again, we're talking about consistency. It puts you to the top of the list, and they don't want that inevitable phone call from you saying when you're going to pay. So by sending your statement out, sending your letters out, and chasing it, when you chasing the debt consistently means that you'll always be at the top of the list. There's some points on if you're getting nowhere and you've tried everything that you possibly can. Follow up on your threats of action. So don't threaten, that's it, I'm going to put you in court, see you in court, if you don't mean it. If you're getting nowhere with receiving payment and the last resort is court action, then make sure that you put them in court. If you send a debt chasing letter saying that if they don't pay within 14 days, they're going to get a solicitor's letter, make sure that you send the solicitor's letter, because otherwise all you're doing is starting the process again. The next time you ring them, or the next time you send a letter, you've got to wait another 14 days or 7 days or whatever it is. So follow up on your threats. And not only that, but it sends a message that you mean business, you're serious about getting your dosh in. Try some online debt chasing companies, they're great. I've used Thomas Higgins, so I'm suggesting them, but there are other ones. But I like them because they're cheap, quick, and it's easy to use. You go online, you set up an account, you upload your invoice, you upload your statement, and the names of the people that you're chasing the debt for, and they do the rest, and they keep you informed. You get an email saying, we've got it to this point, what do you want us to do next? We've got it to this point, what do you want us to do next? And they will go through the process so you don't have to. And they'll say to you, we'll be sending this letter out. And they have a really high success rate. 90% of people that use Thomas Higgins, and obviously they claim this, but I guess it's the same success rate for other companies, is they send out a solicitor's letter, they get paid. But if they don't get paid, if you don't get paid, it asks you, have you got paid from your solicitor's letter? If you say no, they automatically take it to the next stage, even to the point of sending the bailiffs in. And I've had 2 customers that I've actually sent the bailiffs into as a matter of principle, really, because I felt that they could have talked to me. If they'd have talked to me, I would have probably, done a deal with them and taken payment over a period of time, but they didn't. And they paid the bailiff. along with all the costs that were associated and all the heartache, and actually the shame of a bailiff turning up at their work premises and saying, you know, we're going to take that bit of machinery away, and that fork truck we're going to remove, and that company car that sat on the drive. So why did they just not talk to me? And I would have done a deal because I'm a reasonable person. So it's worth looking at some of these, or if you've got your local solicitor that you've got a good relationship, I don't know, a tenner, I think it's probably the going rate for a solicitor's letter. I think Thomas Higgins, it's about £2.50, and it's pretty painless. And I'm not getting a commission from them, by the way, just use them so I know that they're okay. Cash flow do's and don'ts. So do chase often. So this is just a summary, really. Do chase often and consistently. Keep your cash flow updated regularly. And if you're in dire straits from a cash flow point of view, make sure that this is daily or weekly. Keep an eye on your cash, because the minute it starts to go into the red, that's when you need to take action. Well, okay, I can't pay these guys today because it will take me over my overdraft limit. Or I really need to chase this debt and I need to get a bit tough with this customer. Keep communicating with your creditors so that you don't get cut off, because you'll need that. Try different scenarios. So the great thing about a cash flow forecast is that you can actually try different cause and effects. So you can actually look at it and say, right, what if I paid this a bit late? What effect does that have on my cash flow a few months down the line, and or weeks down the line, or days down the line even? What happens if I increase my overdraft limit? Will that get me through this hump? So try different scenarios and see what's best working for you. Allow for peaks and troughs in your trading. Make sure that on your cash flow forecast you make allowances for that. And don't fund capital expenditure out of cash flow. I've got a customer, in fact I've got two customers who actually went bust because they decided to do big capital projects. They got loads of cash in the bank. So this doesn't just happen to people with no cash in the bank. They had loads of cash in the bank and decided rather than going to the bank and borrowing money, that they would do big capital projects, expenditure projects out of cash flow. And they run out of cash. Because of that, one of them went into a voluntary arrangement and the other one went bankrupt. I've got another one who was a cash business, so actually that was their saving grace. They did exactly the same, and the only thing that saved them was that they were a cash business, so they had loads of cash coming into their business. However, it took them 12 months to recover their cash position, and they were cash strapped for a good 12 months. And this is a company that had plenty in the bank, so they went from hero to zero just because they funded it out of their cash flow. Don't be an ostrich, and by that I mean don't bury your head in the sand. If you've got cash flow problems, face up to them, make the difficult decisions, have the difficult conversations. It's all character building, and it'll make you a better business person. And actually you'll find that it's not as bad a conversation as you thought it would be, because people understand, because they've been there probably themselves. Try not to rob Peter to pay Paul. If you're making a loss, address the reason for the loss, because inevitably you will run out of cash. So cash businesses can get away with this. Account businesses, sadly, it comes to them quicker. So by robbing Peter to pay Paul, all you're doing is managing the problem short term, but ultimately you've got to make some grown-up decisions about why your business is not making money. And we talked about some of those, obviously the cutting costs, making redundancies, whatever you need to do, investing in your marketing maybe. So just got a final couple of slides for you. I can circulate this to everybody, but in this current climate, there's quite a lot of access to financial assistance. The government, in my opinion, have stepped up and helped businesses as much as they possibly can. And certainly for a lot of my customers, it's been a godsend. The furlough scheme has been absolutely brilliant. But they've also got the grants. So the job retention scheme, the furlough grant, it has been brilliant for keeping people on. The small business grant funding, which the councils have been paying out, has given a cash injection of 10k to smaller businesses. And for those that are in hospitality, and I've got probably about 3 or 4 customers that are in that. In fact, one of mine, who's got a chain of pubs, so their business completely stalled. That was it, stopped dead. They actually got a grant for each of their premises, and normally in March you'd probably only break even, and they've actually made a profit, just even though they've not made a single sale, because the grants have kept them going. Obviously, they've got to pay some money out of that over the next few months' rent and things, so it will eat into that. But at least they've managed to keep going to when they can start again. So it's been an absolutely amazing. There is another grant as well, which hasn't actually been widely advertised, but it's the local authority discretionary grant, and this is for companies where the rateable value is over 51,000, so they kind of fall between the two stools. They're a small business, but they can't get the grant because their business rateable value is too high. So a pub with quite a big footprint could have quite a high rateable value, but it can't get a grant. So they can actually get up to £25,000, but it is discretionary. So by default, because the local authorities don't necessarily want to give this money out, you have to fight for it and put a bit of a case forward. But those grants have been a godsend to a lot of businesses, and if you haven't accessed any of those, try them. In addition to that, there's some loan schemes. So of my customers have used either the bounce back loan or the C-bills loan. So what they've done is borrowed the money and they've put it in the bank just in case they need it to aid their cash flow to get them over the next few months. They might have money in the bank, but all they've done is said, well, actually, do you know what? We'll take out these loans because A, it's not costing us anything, because there's no setup fee, there's no interest to pay, and there's no actually capital repayments to pay for 12 months, which means that actually it's costing nothing to sit in the bank, and if they don't need it, their plan is that they're just going to pay it back to the bank. Even if they do need it, it's cheap money. It's only 2.5% and it's fixed for the full term of the loan. So typically a 20 grand loan is only going to cost 1,200 quid or so to borrow over 6 years, which is nothing. So they might say, actually, that's better to have that money in the bank, and that will be better than having to go to the bank with a, if I do get a big order or I have a cash flow crisis, I've got the money sat there. A bounce back loan, you can just apply online, so it's just so easy. You answer about 6 questions and tell them how much you want, and Bob's your uncle, it's in the bank. The slightly larger ones, it's just a discussion with your bank manager, but again, he asks about 6 questions, or your relationship manager, and then again, that appears in your bank. So there's some quite good loans there that just help you over the cash flow hump, and they're worth having because it's like an injection of cash into your bank, into your business without any cost. The other thing that you can do is defer your VAT payments. So VAT due in the last VAT quarter doesn't have to be paid until 31st of March. If you are self-assessing, then your payments on account don't need to be paid until January of next year now. And businesses in the hospitality industry have had all of their rates, and nurseries as well actually, have had all of their rates cancelled for a year. So they're not even deferred, they're cancelled. So there is some help there. Have I covered everything, do you think, Mike, in those? Oh, look, I can't hear you.
Mike, you need to turn your mic on.
Yeah, because I've got my mouse on a different screen, so when I press my space bar, it didn't come on. Yeah, so yeah, if anybody's got any sort of applications, anybody sees any of these that think might be useful for them, want to contact us about them, happy to talk them through. And, Claire will be myself. And help them to get access to them outside of that.
Yeah.
I think that's covered. I think that's covered everything, Claire. Yeah.
Well, all of these, if Mike, if you send this out as a presentation, then actually they're all hyperlinks. So just click on those; it takes you to the relevant pages as well.
Yeah. Everybody will be getting a set of slides from the presentation anyway.
Okay. Cool. Yeah. Okay, so I think that just about wraps it up. Thank you. And if you've got any questions, then you can ask now. Otherwise, we're on to Mike again.
Yeah. Anybody got any questions first, or any comments so far before I just round up? Yeah, Carly.
Sorry, it's not a question. I've just got to go in 5 minutes.
Yeah, no, this is just wrapping up now. So, yeah, we're just tidying up. I mean, no need to move it on, Claire, because I'll just talk it through.
Okay.
So this has been the sixth of the webinars that we're running. We've got the helps available if you need anything. Free 30-minute triage Zoom. And if you've got any more topics, anything that you want to have a look at, give us a shout on, just send us an email. And yeah, hopefully we can see people again next week on Tuesday and Thursday for leadership and HR. Anybody got any final comments at this point? Anybody want to come in or anything? We've run over a bit, but hopefully it's been all useful information. Glad everybody stayed with us. If nobody's got anything they want to say at this point, what I'll do, I'll just thank Claire for what I've found being really interesting. And so if you need anything more from it, then just give us a shout and we'll have a word offline. But thank everybody for their attendance.
Yeah, thank you. Good to meet you all.
Cheers then. Okay, bye.
Bye.
Thank you. Bye.
Bye.
How do I get off?
Should be at the bottom, Carly. And I don't know whether you'd got the. I think everybody's just about gone apart from Ali, but it's just if they've got any of the loans that even like I say, just applying for those loans which are cash free and sticking the cash in the bank, which might help you cash flow and then paying it back after 12 months because it'll not cost you any interest.
Yeah.
Well, we've applied for that, the bounce back.
Yeah.
And it's took, we keep having to chase it. It's been 3 weeks. Ridiculous.
See, I applied for the bounce back and got it in about 3 days.
Did you? I know.
Yeah.
I've been on with the bank manager saying, what are you doing? What's happening?
Did you apply online?
Yeah, and I got the email back straight away to say they'd got the application. But I don't know, I think there's a number of people who've sort of been either missed or, I don't know, but she's escalating it today to her manager. So hopefully we'll get something back, but it's just...
I know.
It doesn't help. You need to know whether you're going to get it or not.
Yeah, yeah. And you need it quickly, don't you? When you
Yeah.
apply for it, you want it in your bank so that you know it helps your cash flow. Yeah.
Definitely.
Well, I'm sorry, Carl, I'm delaying you. Can you with the way, like, I know you need
Yes.
to get off, but I hope it's been useful for you today, Callie, and thanks for your participation. And it's as much about kind of sharing experience and what you're doing. So I know you're doing a lot of the cash flow stuff anyway,
Yeah.
and I knew Phil was, and some people are doing it and other people aren't, and hopefully there's been things that we've gone through today that. I'll be a benefit going forward. But I'll hopefully be seeing you and Duncan the next few over the next week or so anyway. So anything you want to pick up, we'll pick up offline.
Okay.
Thanks for that, Carly.
All right.
See you then. All right.
Yeah, bye.
Bye.
Bye.